We might be seeing a market correction in the third quarter, but for now, markets remain supportive based on the recent macro, tax data, and liquidity trends. I'm Ivo, DeltaStock Chief Market Analyst. Let's get to it. Despite the headlines, market action stayed within expected ranges and credit spreads ticked up a little, but not significantly. Again, nothing particularly worrisome happened. I continue to expect supportive market behavior into June and possibly July, but beyond that, the probability of a market correction has increased and it's probably going to happen in Q3. So this is based on global liquidity trends. Liquidity has dropped recently, and historically the market tends to follow liquidity with a 3 to 4 month lag. Liquidity peaked in October 2024 and the S&P peaked around February 2025. Liquidity rose again in January and markets rallied in May. Now liquidity is dropping again, and a correction in August or September should not be that surprising. Last week, we also saw a bit of weakness in the S&P 500 near the 6,000 level, which remains a strong resistance. The last time the S&P had to break through this level was in November. I think it was November, and it took 5 attempts before it held above it. That said, the weakness in the S&P was quite mild overall. The dip only pushed the VIX about 4%, and that's already come back down. So this tells us the move was not seen as especially threatening. Heading into June's options expiration, or the OPEX, I expect any pullbacks to be shallow, likely only down to the 57.20 area, unless there's a surprise negative event that spikes the VIX, which in the VIX is the volatility index. Also, the S&P 500 pulled back right to the 9-day EMA, or the 9-day exponential moving average, and stopped there. That's a strong momentum support line, and since April 22nd, we've only briefly broken below the 9-day EMA once, and that market bounced back the next day. So currently momentum is rather strong. It might have felt like a bigger sell-off simply because it was the first time since May 23rd that we didn't see a rebound after falling below the previous day's low. For now, the market is stable, and the next resistance, which you need to watch, is the one at 60.50. Most of the pressure came from Tesla following the rather strange public spat between Elon Musk and Donald Trump. Tesla led the drop, and now it's leading the recovery. Whether this bounce holds is unclear. Tesla dipped through a key support level, which is the 300 to 310, but landed nicely on a longer term trend line near the 270 level, and is now bouncing back to the 300. Still, this could be a dead cat bounce, and if tensions continue, we might see a bit more drawdown. Personally, I do not hold any Tesla shares, not because I think the stock can't recover. June is often a strong month for Tesla, but because this kind of unpredictable drama with the US president is a risk I really don't want in my portfolio. There's also a phone call between Trump and Xi, which reportedly went well, but that's just talk for now. The market will still need something more concrete. Still, the Chinese stocks are getting more attention, and this is happening lately, likely on some positive expectations. The VIX curve remains in contango, meaning markets are not pricing in a sharp rise in volatility. And on the macro side, data supports the short-term bullish bias, and as the jobs data has been soft but not too soft, hiring rates are seasonally weak, jobless claims have ticked up a little but nothing dramatic. Silver has been rallying, which could mean traders are positioning for rate cuts as they expect a weaker jobs market, but strong enough to push back the recession narrative. Tax data supports this, as well as US tax receipts came in at 14 billion, which is up 4.7% year on year, and the 4-week average growth is about 14%. When adjusted for GDP, that's 2.5 year on year and slightly above last year, a sign the economy remains solid even if momentum is slowing. Income tax receipts continue to show positive growth, nearly every week. If we were nearing a recession, we'd see negative numbers, but currently we are not. Growth has slowed over the past 10 weeks, but the latest data suggests it might be stabilizing. Of course, the bottom line is that the US economy is still strong, just cooling off gradually. No clear recession signs yet. That's about it. Thank you for watching. Leave a like and subscribe if you enjoy the content. That's all. See you next time.